Let me see where we start. Okay. So basically we've done two sessions, right?
Yes.
Yeah, we've done the supply and demand, EP and IP. So we're supposed to start from the advanced stage. Okay. All right. So are you ready?
Yes.
All right. Give me a minute. Okay. So the advanced stage is going to include everything about Argo, the Argo structure, Argo liquidity types, Argo cycle, and selecting POI. So good. Now, how does the algo works? Now, the algo, right? We algo traders, we try to like follow how the hedge funds and the big banks do trade. Even if we don't know 100% exactly how they trade, but we try to at least go in line with them. And and after understanding this stage right here, after understanding manipulation stage right here, we understood that the algo they do trade after taking out stop losses of all other traders, after manipulating highs and lows. Okay, that's when the algo want to jump into the trade. So how the hedge fund do work? Let's say we have something like this, right? We have this low and then we have this high. So now how they do trade? They know that smart money order blocks is going to be here. Sorry, give me a minute. Let me this noise is coming. Sorry.
Okay.
Okay. Okay. So let's continue. Sorry. So the hedge funds, they know that smart money traders will be looking to buy from this zone. They want to buy from here. So what they'll do, they know stop losses lies below this other block. So the hedge funds, they'll want to take their buy after this low has been taken out, right? After taking out these guys. So from this low right here, from right here, after price takes out this low right here, the hedge funds would want to buy from here. And when they buy from here to target this high right here, okay, when their buy is running to this point right here, then they begin to take off profits from the buy. Because they don't like the hedge fund don't trade like us that use normal lot size. Their lot size could be like 1,000, 20,000, 50,000 lot size. Okay, so when price takes out this high, then they begin to take out profits from their buys. Okay, then after this high gets taken out, they begin to look for sell to go target this low. So they've taken profit off this buy, then they're looking for sales to target this low. Okay, so the hedge funds, that's what they do. They target highs and lows, target liquidity. So that's how the hedge funds do work. Now, the algo structure or the manipulation setup, I know you've seen it a lot of the times. I actually know it when we have this. This is the algo structure. This is the bedrock. This is the foundation of everything we'll be doing in this mentorship and everything you'll be doing in live trading, everything you'll be using for backtesting. For your entries is the MS with the manipulation setup. Where we have the break of structure right here. We also have the break of structure right here. The when price takes out this low, this becomes a fake break of structure. This becomes inducement, and then we look for mitigation and the true break of structure. So let's understand that properly on chart. Okay, so this is what we have. For an uptrend, let's say we have this high is a break of structure. When price comes down, creates a new high, we have a break of structure. And remember, I said that we see every high and every low as liquidity. We see every high and every low as liquidity. So for an uptrend, all of these lows are liquidity, right? Good. So when we have something like this now, this is a normal break of structure. This is just an anticipated liquidity low. So when price comes down to take out this low right here, take out this low, this now becomes our liquidity being taken. We can, for short, we can call it inducements. It's also IDM, length of control, which is the inducement, right? So after price takes out this inducement, this high right here then becomes the fake break of structure. This high then becomes the fake break of structure. And then after the inducement, after price induce this low right here, anything can happen. Price can just reverse immediately after the low has been induced. Price can reverse to the upside, or price can come back down, come deeper to mitigate our valid demand zone right here. So this is mitigation of valid demand right here. So price can do this, mitigate the valid demand. And after mitigation, for the algo cycle to be complete, we want to see this price takes out this high. This high then becomes a break of structure high. Now, if you're taking yourself from here, now if this is our 1 hour time frame manipulation setup, right? 1 hour time frame MSU. As soon as price gets to this true break of structure, the MSU is complete. So when price comes to this low and mitigates and induce this low right here, you can then switch to your lower time frame entry, right? The entry time frame you want to be using, either the 5 minutes or the 1 minute time frame. When you then switch to that time frame, you look for your entry and then you take your trade. Let's say you take your trade right here, stop loss right below this. That 5 minute time frame, your target should be the 1 hour MSU. The target should be the time frame that you spotted the manipulation setup, just like this. Okay, so everything we'll be doing in trading, everything we'll be trading, it all comes down to this manipulation setup right here. This is the manipulation setup. This is the BOS. This is the fake BOS. This is the inducement, and then this becomes the true break of structure. Then we have mitigation of our valid supply zone. Now, mitigation doesn't happen like all of the time, okay? Sometimes price will just take this out and drops. Now, this mitigation right here on valid supply, it is our refined valid supply. Because remember, I said the whole pullback right here, this whole pullback right here is our supply zone. So price can do this, mitigate this supply zone, mitigate the supply zone, the whole of the supply zone. So this is now EPA. Okay, price can do this, mitigate the whole supply zone, and then drops, failing to come to mitigate this value supply. Do you understand this?
Yeah.
Okay, this is the manipulation setup. So, right. So now let's look at the manipulation setup on chart. We are going to spot them. I'm going to show you saved example first, and then we're going to look on the chart to spot our manipulation setup. We are going to train our eyes to understand the manipulation setups. So let's go. Okay, good. So I'm going to use the 4 hours time frame. Good. Let's use the 4 hour time frame. So we are going to spot them together. Okay. So, so from here, we are going to like spot the manipulation setup together, understanding structure. Okay. So let's understand the manipulation setup. So let's start from here. This low as our last structural low. Okay. Then price came all the way up and then tagged this high right here. So this high then becomes our next structural high. This low right here becomes our next structural low. Let me zoom in so you'll be able to see it clearly. This low, our next structural low right here. Then this low got taken out by this low, okay? Because this week took out this week. So this is a new structure point. So we're going to mark the high that took out the structural low. And then what we had a new low right here. Then price came all the way up right here. Price came all the way up right here and then came to this low. Now, right here, we have our MSU pattern. Look at this. Let's use the part two first. We have this. Price came up, came back down, came up, and then this. So this low right here will be tagged as our BOS. These are fake break of structure right here.
Okay.
These are fake break of, sorry, that's a fake break of structure. This high right here then becomes an inducement because this high then becomes an inducement. Now, if I take it back, if I use the replay to this point, okay, if I use the replay to this point, right, and I take this off, this just becomes a structural low. Let me show you. These are structural low. Then when we play it and price broke structure to the downside, okay, this right here is our normal break of structure. This is our normal liquidity high, right? So until price comes all the way up to take out this high, when price takes out this high, now this for a downtrend, we see all of the highs as liquidity. So until price comes all the way up to take out this high right here, then this low then becomes the fake break of structure. This low then becomes the fake break of structure. This high then becomes the inducement. Okay. Then after inducement, what do we want to see next? We want to see mitigation before the true break of structure. So, good. Right here is the true break of structure. True break of structure. Now, the mitigation now you should have noticed from the chart and the blue chart, the PY that we do mark, okay? We use candlestick wicks to mark PY. So from this range right here, if I want to mark my value PY, I'll mark this week right here. I'll mark this week right here. So I can term this as mitigation. Okay. Is our mitigation. So now for the algo structure for the MSU to be a valid MSU, we want to see we want to see four things, or let me just say we want to see five things. First of all, we want to see a fake break of structure. We want to see a fake break of structure. Then we want to see an inducement. We want to see an inducement. The third thing we want to see, we want to see imbalance or IPA. Imbalance or IPA. Okay. Then the next thing we want to see mitigation. That's the fourth thing we want to see. The fifth criteria is the true break of structure. So these five things here, they make up the algo structure, the manipulation setup. So we want to see them before we say, okay, this is an algo structure. Okay. So let's check this MSU pattern that happened right here. If we have these five things right here. So first thing happened, we had the fake break of structure checked. We had the inducement check. Then now let's see if there's an imbalance or IPA. So let's see, we had this right here. This is an imbalance right here. And then above the imbalance, we have our valid supply zone right here that price mitigated from. After the imbalance right here, let me term this as imbalance. After the imbalance right here, then we got mitigation of valid supply zone, right? This mitigation. And then when price takes out the low, that becomes a true break of structure. So for this right here, we say the algo cycle has been completed. So this is an MSU pattern. Do you understand this? Yeah, because okay. Because remember I told you I use candlestick wicks as POI, right? I
Yeah.
use candlestick wick instead of marking this last buy to sell candle right here. If that candle is having wicks above them, I mark the week because weeks are like refined POI. So if this I have imbalance right here, I also have imbalances right here. Okay. Then I also have imbalance right here too. Okay. I see we have three different imbalance, right? So now above the imbalance, what POI, what zone we price react from? That is when we are going to look at all of this. We are going to look at everything happening here to see if there's a POI that price is going to react to. And judging from how I mark my POI, I will not take this. I will not mark this. So this is off for me, right? Then I'm going to look this candlestick. Is there a valid wick for me that I'm going to mark as my POI? No, there's no wick here, no wick here. And then there's this one right here. Okay, there's this one right here. So I'm going to mark this. And for me to check if that wick is actually a valid wick, there is an MSU happening. Then we have imbalance just just below the unmitigated wick. Okay, to just below the unmitigated week. So this week right here becomes my valid supply zone. Okay. And as you just saw right here, price out the mitigated week. Okay. So for POIs, we use unmitigated week because this week has not been mitigated by anything. This week was the valid supply. You understand?
Yeah.
Okay. Um, Structure. Let me say this. If it does this, it is not valid because remember, for us to take trades, we want to see liquidity gets taken out. Remember, for our valid supply and valid demand, we want to say break of structure, inducement, same thing right here, right? So for one of my trading rules, right, no liquidity, no trades, right? So if it does this right here and comes to mitigate this POI, I will not take this because on this time frame, price did not take any liquidity, right? But what we are seeing right here, price did this, came back down, right? Broke this structure. So this becomes a liquidity. So when price took out the liquidity right here, then this makes it a valid zone because price reacted from it and gave us an entry on the smaller time frame. Okay. But if price also does this, and does this, then I can probably go on the lower time frame and see if on the lower time frame I can see something like this happening on the lower time frame. This leg this leg, this leg. So when this happens on the lower time frame, this becomes the fake break of structure. This right here then becomes the inducement, right? Then I would say, okay, this is then valid. Then I'll short to take out the true break of structure. Do you understand now? This is valid. It
Okay.
is. Yeah. So let's keep on playing and see if we keep on if we see the manipulation setup. Okay. If we see the manipulation setup, because you need to understand structure points. So we have this high and this low, right? So from this high to this low becomes our range, right? So let's see if price breaks out of the range. Good, price breaks out of the range right here. Then we have a retracement right here. Then let's see price breaks out of the range. Because for MSU, we use external structure, okay?
Okay.
So this then becomes low, this then becomes a new high. So let me set a time frame where we're going to stop. Okay, we're going to stop here. So let's proceed with price broke structure right here. And then the low that was responsible for the break was this low. Okay. Then we
Okay.
have a new one right here. Then we have a new low right here. Now, good. Right here, we have our MSU pattern already. Look, because from this leg right here, we had the normal break of structure, the normal break of structure, right? Came back up, gave us a break of structure. Remember, all of these lows are liquidity, right? So when price broke this high right here, when price broke the high, it came back down to take out the low. So this low becomes inducement. This low then becomes inducement. When this low becomes inducement, now we're looking for imbalance or IPA, then mitigation, right? Then this was IPA right here. This was IPA. Then we have this huge imbalance right here. So this was IPA. Then this whole range becomes our demand. Okay. This whole range becomes our demand. Let me save it here. So this whole range becomes our demand. This last sell to buy candle right here becomes our refined demand. So as we can see, we have a fake break of structure right here, a fake break of structure right here. Then price took out the inducement. So we've seen fake break of structure, we've seen inducement, we've seen the imbalance or IPA, then we've seen mitigation because price mitigated this demand zone. Okay, price mitigated this demand zone, and then price shot to the upside, and then the true break of structure then becomes this high right here. So we can tag this high as a true break of structure. You understand this? Yeah, it's also valid. It's also valid because it took out the inducement low. Okay.
Okay.
Yeah. And sometimes price can just take out the inducement low, can just take out the low right here and then goes back up to true break of structure. It's also valid. It's also a valid algo structure. You understand?
Yeah.
Okay. Now we've seen one, we've seen two MSU just within this short period of time. So let's keep on playing. So if you go down lower time frame, you're going to see MSU everywhere, the manipulation setup. So these are structural points. These are structure points. This high is our next structure high. This low is our next structure low. So let's see if we see one more, then we're going to proceed with our lesson. Then we have this high right here that took out the low. So we've got a new low right here. So let's keep on seeing. Then we have a new high. Now I want to see price come down. Good. So now this is an algo structure. Let's take it back a bit so we understand it better. So at this point right here, this is a break of structure. This is a break of structure, right? All of these highs are liquidity, right? These highs are liquidity. So let's keep seeing price broke the structure. Then as soon as price takes out this high right here, this then becomes inducement. This then becomes our inducement. Okay, becomes our inducement. Then this low then becomes our fake break of structure. Now, what we want to see for this to be complete, we want to see a true break of structure, mitigation, and yeah, I want to see mitigation. So I'll be looking to mark this POI right here. I'll be looking to mark this week right here. I want to see price react from this before going down to the true break of structure. So let's see. Okay, price did not react from it, but then price went direct to the true break of structure. So in this case, there was no mitigation. Okay, that's why sometimes I don't trade using POI. Okay, after price just takes out the inducement high, I begin to look for my entry to target this low. So this is an MSU. So we've seen one MSU, two MSU, three MSU. Is that clear?
Yeah.
Yeah, okay, cool. So let's look at what we have next. Good. Now we've understood the algo structure or the manipulation setup, MSU for short. Now, let's look at the entry, stop loss, and take profit, even if I've already explained it, okay? And then the algo cycle completion after true break of structure. Now, when we have for this first one right here, right? For this first one, your entry, your entry would be after the inducement on mitigation. Let's say I'm using this PI right here. Your entry will be here. Your stop loss will be above this POI right here. Then your take profit will be the true break of structure right here. Now, when we go into like entry types, entry rules, and all of that, that is when I'm going to show you how to like refine your entries. Probably from the 4 hours MSU, we can go down to the 5 minute time frame to look for 5 minute entry or 1 minute entry, then to target the 4 hour true break of structure. So this is how we set our entry, our stop loss, and our take profit. If we look at these two, if we look at this right here, this this refinement, this refinement, we set our entry right here, stop loss below this, take profits at the true break of structural high, right? Same thing with these two. This is how we do it. The stop loss right here, stop loss above the high, the take profits always at the true break of structure right here. Because for the algo cycle to be complete algo cycle, right? Price needs to take out the true break of structure low. Because why is advisable to take your profit at this low? Because after the MSU, price can decide to do this, reverses, okay? And price can also come back to mitigate the MSU POI, which we're going to look into, and then continue going back down. So at the true break of structure, where the algo cycle is complete, you take out all of your trade, you take your profit. Is that understood?
Yes.
Okay, cool. So let's look at okay. Good. So now let's look at the algo liquidity. Since we've already understood how the algo works, the manipulation setup, the how to set your entry, stop loss, and take profit based on that particular time frame, and the completion after the two break of structure. Now, the algo liquidity types now. Algo liquidity types. We have three basic liquidity types: the inducement liquidity, the structural liquidity, and the transactional liquidity. So the inducement liquidity, right? The inducement liquidity is what we have here. This is the inducement liquidity. The MSU is the inducement liquidity. As easy as that, because this is the inducement liquidity, right? So we call the inducement liquidity ILQ for short. Okay, we call it ILQ for short. So let's look at these saved examples. Let's look at these in order to understand it better. Same thing we just talked about, right? We will have the break of structure, then we have the break of structure, all of the lows are liquidity, right? So for price to take out this low right here, this then becomes the inducement liquidity, or we call it ILQ for short. ILQ for short. So when price induce the low right here, then we then get mitigation of our refined value demand, then the true break of structure. So for the inducement liquidity, the things we want to see for inducement liquidity is still the same thing we would like to see for the MSU, okay? That's the fake break of structure, the inducement, the imbalance or IPA, the mitigation, and then the true break of structure. You understand?
Yes.
Same thing for the sales too. We want to see ILQ get taken out, mitigation of value supply, and then the drop to the true break of structure. Is that clear?
Yes.
All right. We're going to look at some examples. So let's look at what we have. Marking structure points, right? We have this high, we have this low, we have this high, we have this low, and then we have this high, right? Price broke structure to the downside right here, created this structure point, this structure point. So at this point right here, Okay, my color. So at this point right here, when price was here, this was just a normal break of structure. This was just a normal high we are looking at to get taken, right? Just a normal high we're looking out to get taken. Then when price comes all the way up and then takes out this high, this becomes a fake break of structure. This becomes a ILQ, the inducement liquidity. Okay. Then after inducement liquidity, what we want to see, we want to like we want to see the imbalance of IPA, then we want to see mitigation from our value supply or value demand. Now on this chart right here, I'm seeing two POIs, okay? This is one of them this week right here, and then this week is another POI. So probably if I traded this, I might have getting stopped out, or probably on the 1 minute time frame, there will not have been an entry confirmation. So price came all the way up to the extreme right here and mitigated this week, and probably like gotten an entry from here, stop loss above here on the 1 minute time frame or 5 minute time frame, and then our target would then be the true break of structure. So this is an inducement liquidity. Do you understand this? Yeah, it's just the same thing. The inducement. Okay. Okay. You mean
Okay.
yeah? Okay. So let's look at the next image. And remember, the inducement liquidity must be an external structure.
Okay.
Must be an external structure point. So let's look at the next example. Now let's look at this. Okay. Now what we have right here, we have one of these external structure points. Price came all the way down, came up, came down to this point. So this becomes our fake break of structure. This becomes our ILQ. Because price came all the way up, opened right here. So understanding candlestick formation, right? When this candle closed and this one opened right here, it went up to mitigate this week right here, this unmitigated week. So this becomes a valid supply, price mitigated it. So we have a fake break of structure, we have an inducement. So after mitigating that week right here, it then came down to the true break of structure. So this is ILQ or MSU. You understand?
Yeah.
Okay, cool. So let's see the next. Yes, there is no imbalance right here. But when you go on lower time frame, we're going to see a bunch of imbalances. And then this week, remember the POIs I do mark, they are weeks, right? So if you go on the lower time frame, this is the 4 hours. If you go on the 1 hour time frame, we're going to see imbalance and also IPO on those time frames, okay?
Okay.
So, so let's see the next example. Okay. So what we have right here, we have this structure point, this structure point. This becomes a fake break of structure right here. This becomes a fake break of structure. This becomes our inducement liquidity ILQ, right? So when price went up to take out the fake break of structure high, it then came down to induce this low. So this becomes our ILQ, right? Then on this example right here, from this high to this low, from this high to this low right here, this was IP, right? And then we have a bunch of imbalances below. So this was ILQ. Price came back down to mitigate this whole range right here. This whole range is a valid demand zone. This whole range is our valid demand. This is our mitigated. This is our refined demand. Then this week right here is also our refined POI. Okay. So what did price do? After inducing, the price came to mitigate the whole of the demand zone and then went up to the true break of structure. Do you understand?
Yeah.
Yes, correct.
Okay.
that fake. Yeah, correct. Then after after we've gotten the true breakup structure, right? Let's say we have this right here. After we've gotten the true breakup structure at this high, the true breakup structure, this is our inducement liquidity, ILQ right here, okay? The POI that formed after this liquidity got taken out, right, is our MSU POI. Okay, is our MSU POI. So after the true breakup structure, we want to see price come into the MSU POI and then continues the up move. I'm going to draw it out for you to understand when we actually come into that. I'm just trying to show you the illustration, okay? So after the true breakup structure right here, after the true breakup structure right here, price came back down to mitigate this demand zone, right? So this is our MSU POI right here. This is our MSU POI. Price mitigated the MSU POI after the true breakup structure, and then it came back up to take out this high. You understand this?
Yeah.
Okay. So let's look at the next example. No, wait, this is the same example as before. It's the same example as no, I think we've seen that one. Okay, we've not seen that one. Okay, this one is another example right here. This we have from this high to this low as a structure point. So we had IPA right here, right? We had IPA, and we also have this is also our imbalance right here. What the price do after this fake break of structure right here, this becomes an inducement. Price came back down and then went up to the true break of structure. Okay, so remember this whole range right here is our demand zone. So price mitigated the demand zone and then went up to the true break of structure. You understand this?
Yeah.
Cool. So same thing with this. The low as BOS, this had liquidity. When price came up, took out the liquidity right here, this becomes a fake breaker structure because imbalance and a valid supply zone. Price did the mitigation right here and then came all the way down to the true breaker structure. Is clear?
Yeah.
Yes, that's MSUPI. But remember, if for MSUPI, right? For MSUPI, when we have something like this right here, this is our MSUPI, right? So price can come in and then go back down. But if we want to see an MSUPI that is valid, we want to see an inducement before that POI. So if we then see something like this, right? When we don't see, when we then see this for the MSUPI, we then see our inducement is also a fake break of structure, right? That makes the MSUPI a more valid POI because it has liquidity before it. Do you understand?
Yeah.
But then I would not be trading this POI because POI that are created due to news, right? POI is created before news and liquidity. And this was a news move right here, 230. This was a news move right here. So this whole POI right here created because of the news is a trap because I know people will be looking for sales right here. So I will not be trading this POI because I know price is going to come all the way up to take out the POI right before dropping. Do you understand?
Yeah.
So now let's look at this image right here. Now, on from your assignment, right, we are marking this as inducement, right? Probably when we have two structure points, inducement is also external structure point. So when we have this right here, we have this big of structure, liquidity, liquidity. So on your assignment, you were marking when price came to this downside and then up, you were marking this as your inducements. Was it for your valid supply and valid demand? So you're marking this. So when price does this, right? When price take out this second low, that means price has taken one level of structure, two level of structure. So when price takes two level of structure, that is another different type of liquidity information. Okay. So for the inducement liquidity or the MSU, price needs to take just one level of liquidity. So for the inducement liquidity, price will just take this, mitigate this, and then go back up to the true break of structure. You understand what I just said?
Yes.
Okay. Now, when we have something like this right here, after the inducement low, right, for the external structure, after the inducement low, we have our mitigation. Then the second low right there becomes our invalidation low. So if price comes down to take out this low, the inducement liquidity has been invalidated. We are no more looking for inducement liquidity. Do you understand?
Yeah.
Okay. Because after this low gets taken out, a new type of liquidity should start forming, which is not our inducement liquidity. So just take note, after our inducement liquidity, after our IOQ, we have the mitigation zone. We have the mitigation zone. Then we have the invalidation zone. When we start looking at the other type of liquidity, this invalidation zone is going to turn our TLQ, transactional liquidity. So let's proceed. Same thing for the cells, right? If this first level of structure gets taken out, that becomes an inducement. If the second level gets taken out, that has invalidates the inducement liquidity. That is no more the inducement liquidity. You understand?
Yes.
Okay. Now, since we've done an example of chart, these are our inducement liquidity. One, two, three. Now, now let's look at the next type of liquidity, which is the structural liquidity. Now, structural liquidity, this happens when a structural low, a substructural low or high forms within a range. Now, remember how we used to mark um, external and internal structural points, where we have this. When we have this right here, these are external structure low, external structure high, external structure low, external structure high, external structure low. So remember from here, right from here, everything that's happening within this range, right? Everything happening within the range before the breakout of the high or the low is our internal structure, right? And structural liquidity deals with internal structure. Okay. Structural liquidity deals with internal structure. So if the range then gets broken right here, this low then becomes our external structure. Now, before the break of this high and low now, all of this other low, this is our internal structural low, right? This also an internal structure. Do you agree with this?
Yeah.
Good. Now, internal structural lows, they are also structural liquidity. So right here, this is SLQ. It's short for structural liquidity. So this is SLQ. And for SLQ to happen, price can decide to come down, can take out the first SLQ, then goes back up. Price can come down, take out the second SLQ, take out all of the SLQ, then goes back up. This is how SLQ forms. Do you understand?
Yeah.
Yes, for the SLQ. Yeah. Okay. So let's look at saved examples for the SLQs. SLQs. Okay. Let's look at this. Then we'll look at the chart to spot out SLQs. So we have this right here. We have this, right? So this is our um trading low, external high, right? So it becomes our trading range. So before the break, all of everything happening within is our internal structure. So this becomes our new external structural high, then price creates this structure point right here. So this becomes our structural liquidity. If price should do this, come down, take it out. Okay. Same thing for the sell right here. Is external structure, external structure, external, external, right? So before the break of the range, this structure point was created. So this becomes our SLQ. If I want to see price, take out the SLQ and then drop. And now price can decide to do two things. Either take out the SLQ, drop, or goes up, take out SLQ, take out ILQ, then drop. So after the SLQ, let me clear all of this. So after the SLQ, we have the ILQ. Do you understand this now?
Yes.
After the SLQ right here, we have the ILQ. Then this low becomes the invalidation point. When we look at the next type of liquidity, then this invalidation point is going to change to CLQ. So now let's look at the next chart image that we have. Or the next chart image that we have. This is just as the scenario of what I just explained now, right? Price would want to take out the SLQ and then goes up to the TBOS, and price can decide to go down to take out the ILQ and then goes up to a true break of structure. Because after the SLQ, we have ILQ, then we have the invalidation. Same thing for the cells. After the SLQ, we have the ILQ, and then we have the invalidation. You understand this?
Yes.
Okay. So we are going to look at this example right here. So for external structure points, we had this high, we had this low, we had this high, we had this low. Then we had this high that broke this low, right? So now from this high to this low, we have a new range, right? This becomes a new range. And we want to see price take out the low, mitigate this POI, and then go back up. You understand this?
Yes.
So now for this one right here, right? These are high, these are low, right? Before the break of this low, price gave us multiple structure points, right? So everything on green is external structure. So price then created this external structure high. Then before it broke the low, right? Before it broke the low, it gave us one internal structure point, two internal structure points, right? And these structure points, they are structural liquidity. Now, for your structural liquidity to be complete, right? It's still the same thing. Price need to mitigate. Price need to like induce the structural liquidity, how the liquidity high or low before going. Now, for this case, we had two SLQ. And what the price do? After price broke the low right here, price went all the way up to take out the first SLQ and then drop to the true break of structure. Okay, that means price took out this first SLQ and then fail to take out this second SLQ. Do you understand?
Yes.
Good. Then let's continue still on this chart. Still on this chart, we had this low, we had this high, we had this low right here, this high to this low, right? When price broke the structure right here, this high that broke the structure is an external structure. And don't forget, external structure are liquidity, right? The ILQ deals with external structure points. The SLQ deals with internal structure points. So if this is our external structure point right here, this is our ILQ, right? Then price creates this structure point before falling. So these are structural liquidity. Now for this case right here, price took out just one level of SLQ and then dropped. So for this second scenario, price took out the SLQ, took out the ILQ before started dropping, right? So price took out this, then mitigated this before going down. Do you understand?
Yes.
Okay. Then for this other example, right? This other example, marking the structure point, these are high, these are low, these are high, these are low, right? Then before the break of this range, the high and the low, price did this, then broke the high right here. So when price did this low becomes our S of Q because price actually went up and then came back down to take out the SLQ before going to the TPOS right here. So price took out the SLQ without taking the ILQ. Okay, price just took out the SLQ and then shot to the upside. You understand this?
Yes.
Okay, cool. So let's look at the chart to spot one or two SLQ patterns, right? Okay. Now there are many SLQ, but for SLQ to be a valid SLQ, price needs to take it out. So if you are seeing any SLQ that got respected, you can show me the any SLQ that got respected right here. Okay, for this example right here, this was what we had. We had this high, then we had this low, then we had this high. This high is our ILQ, right? The high, this second high right here is our SLQ before it broke the low, right? So this SLQ formed, and then what did price do? Price came down, took this out, right? Broke structure to the downside, and then went to take out the SLQ, right? After taking the SLQ, it also took out the ILQ, then it dropped. Okay, so let's look at other examples. See if a clearer example. Okay. Now SLQ, right? SLQ. Okay, no, that's not an SLQ. That's not an SLQ. I'm looking. Okay, this is a 4 hours time frame. That's why. No, I'm not seeing any right here. Okay, I think let's look at this right here. We had this low to this high. Is that what I'm seeing? Okay, we had this low to this high right here as our structure point, right? So before price broke out of the range, before price broke out the high right here, price created this structure point, this structure point, this structure point, this structure point. So all of these lows right there, they are SLQs. All of these lows are SLQs. So what did price do? When price broke structure to the upside, it then came down this point. It took out 1, 2 SLQ level. Then before coming to this true break of structure, price then came back down, took out all of this SLQ with this week before going back up. Okay. But this for this case, this did not go back to the true break of structure. This actually failed. But then as long as the SLQ got taken out, let's keep looking. Let's keep looking. Okay. Let's keep checking out SLQs. Now, where you are going to like look, you're going to see lots of SLQ is when you go down on your lower time frame. It works like magic. You're going to see a lot of SLQ, okay? Most especially when we come to the like entry time frame. So you're going to see lots of SLQs. You understand? You can start from the daily time frame. You
Okay.
can start from the daily time frame to see the overall bias. But then most of the time, if I don't like stay long on the chart, I just start from the 1 hour time frame and then I just go back down and do what I'm supposed to do. So so let's see the next type of liquidity is the transactional liquidity, right? The transactional liquidity or transfer of money. Now remember how after no, this is not what I'm supposed to use. Let me use this. Okay. Good. Remember how I said after the SLQ, we have our inducement liquidity, right? The SLQ is internal structure. The ILQ is external structure. ILQ is when price takes out one level of liquidity. Now, the third type of liquidity is the transactional liquidity. And transactional liquidity is when price takes out two levels of external structure, right? So when price takes out this level of liquidity, this one level. When price takes this out, this becomes two levels of liquidity. Then this level right here then becomes our TLQ. So after SLQ, we have ILQ. This is for the sell scenario. After SLQ, we have ILQ. Then we have TLQ. Same thing with this. After SLQ, we have ILQ. Then we have TLQ. Understand this simple logic?
Yes.
Okay, cool. So now let's look at TLQ examples. Good. It's going to look a little bit confusing, but we're going to understand it. And this TLQ, it doesn't like happen like all of the time. Probably once in a while it happens on the chart. So let's see what's going to happen, right? So on this chart, when price does all of this move, these are ILQ, these are invalidation level. Now the invalidation level is also a transactional liquidity, right? It's also the TLQ. So when price takes out the two levels of liquidity, right? Two levels of opposing transaction. When price comes all the way down, takes out the inducement liquidity, then takes out the invalidation level right here. When price does this, right? When price does this, then we want to see an MSU right here, a fake BOS and inducement. Then the POI above this right here then becomes a valid supply zone, because when price, after price takes out the two levels of liquidity right here, money was transferred from this TLQ low down to the supply level right here. Okay, price transfer money from this second level of liquidity that got taken out down to the valid supply zone right here. And for a supply zone to be valid, don't forget, I want to say fake BOS and inducement. So this becomes a valid supply zone. So for the TLQ is also external structure, two levels of external structure. Same thing for the sell. Price took out ILQ, price took out TLQ. This invalidation level then changes to TLQ. Price transferred money from the second level of structure that got taken out down to the demand zone right here. And for a demand zone to be valid, we then get MSO right here, a fabric of structure, and inducement. Price then came back down to mitigate the refined value demand and then the true break of structure. So this is typical example of CLQ. Exactly, exactly.
Okay.
Good. Yeah. So because normally after the inducement liquidity right here, we are looking for buy at this point because IOQ got taken out. So we're looking for buy to the true break of structure, right? So when that level then failed, when the invalidation level failed, price then took out this second low. This then becomes TLQ. And then for the transfer of money to work, when we then see this, right? When we don't see the fake break of structure, the inducement, price then transferred money from this low up to the value supply and then to break of structure. You understand this? Yeah. Yeah,
Okay.
that's like for a reversal.
Okay.
Yeah. So now let's look at the next let's look at this. Now, all of the markup, right? Remember, I said the TLQ is like a very rare on the chart. In order for you to see it, you need to actually look well. All of this markup, I'm just going to explain it because I'm not sure they are actually the exactly TLQ that I just explained because these are old markup, right? So let me. Yeah, I'm here, bro. I'm here. So for this example right here, for this example right here, I mark this as following structure point, right? This was supposed to be our first level of structure. This is supposed to be our second level of structure. Then price took out this first level, took out the second level, right? Took out the second level. So this right here, ILQ, this is TLQ. So when price does all of these, took out the second level of structure, price did this, then did this. Okay. So after taking the second level of structure, which is here, price then transferred money from this high into this valid demand zone. Because when price transfer money to the zone, see we have inducement before the zone, we have feed break of structure before the zone. So this then becomes our valid demand to target the true break of structure high. You understand?
Yeah.
Okay. So let's look at the next example. But for this next example, remember how I told you that sometimes price does not go for mitigation. After taking liquidity, it goes back up. So for this, we had one level of liquidity, two level of liquidity. This is ILQ, this is TLQ, transactional liquidity, right? Then price transferred money from this high down to this POI right here, okay? And then when you transfer money to that POI, right, then does all of this, gave us liquidity, right? So this becomes an inducement. So price then took out the inducement right here. Immediately took out the inducement, price was reversed to the upside. You understand this? Yes, I was going to explain that. Yes. That's also exactly. I was about to explain that you're on point. So
So
price does this transfer from there, or because if this is also the second term, price took this out, came all the way up here, we should be looking for valid POI, right? And remember this whole range. Um, Remember this whole range is our supply zone, right? This whole range is our supply zone. This whole range also our supply zone. So price actually mitigated this whole supply zone right here. So I don't know what happened in the future because I don't know if price actually respected this other TLQ, this transfer of money to this zone before dropping. You understand?
yes.
Then let's look at this other one. This one, okay, this one did not happen. It was an anticipated TLQ. Because price took out one level, took out two level, and then to this POI, this is inducement. I was waiting for price to come mitigate this and then it goes back up. You understand?
Yes.
Mhm. Um, Let me see. Okay, are you like writing or hello, bro? Are you writing it down? Can you hear me? Like, are you with your pen and paper? Are you writing down? Okay, bro. Okay, bro. Let me mute myself for like 5 minutes. I want to go to the bathroom to use myself.
Okay.
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 All right. Okay, sorry about that. Are you here, bro?
Yes.
All right, sorry about that. Sorry. So we have talked about the three basic types of liquidity, which is the inducement liquidity, the structural liquidity, and the transactional liquidity, right? These are the major type of liquidity we have. The inducement liquidity deals with external structure, the structural liquidity deals with internal structure, and then the transactional liquidity deals with external structure. Now, let's look at the double inducement. This is just like a new concept, right? This is a new concept because I'm not going to talk deep on it because I have not back tested it. Okay, I just like checked it out, and so I'm just going to explain a little bit before we proceed with what we're doing. So for the double inducements, right, it's when price take out the ILQ, then before breaking the through break of structural high, it comes back down to mitigate the other inducement. Now we have something like this. Okay, let's use the downtrend as scenario. We have this good at this point right here. At this point right here, this is the inducement, the ILQ, right? This is the ILQ. Then, after the ILQ, we want to see price go directly to the true break of structure, right? Then, if this fail to happen, this fail to happen, and their price comes back down, and then goes back up to take out this other high before coming down to the true break of structure, right here. So this becomes our ILQ. This becomes the second ILQ. So in this case, we'll call this one the double inducement. Double inducement right here. Okay, double inducement. Now, in cases like this, probably there is a refined POI right here. There's a refined POI right here. That price was going to mitigate. Okay, price failed to mitigate it after the first inducement right here. Then price had reason to go up. Price mitigated this other high right here. It took out the high to go mitigate this. So then we call this the double inducement before price comes down to the true break of structure. Understand this pattern right here?
Yes.
Okay. So when I finish my testing, when I'm done with back testing, I'm going to be sending lots of the markups on the group chat. I think this double inducement pattern happened last week, but I can't remember exactly where. If I do, good, good. I think this is double inducement already. Perfect. Now let's look at this. Let's look at what we have here. This is the fake break of structure. This is the inducement, right? This is the inducement. Then price was supposed to come down directly to the true break of structure, but then this was the high here. But then price went higher. Price went higher, right? Price went higher to take out this other high right here. It took out this high. Then this becomes the double inducement. The double inducement. It becomes double inducement. And after price takes out that high, right? It then goes down to the true break of structure. You understand this?
Yes.
This is a perfect example. So let's see. Good. So now, so let me see these two markups. So after understanding double inducement, when I do the testing and all of that, I'll send to everybody. Now, the next type of liquidity, this is the one everybody knows, the normal trend line liquidity. Okay, the normal trend line liquidity when we have compression. This way we have compression, price is creating all of these lows serves as liquidity for future transaction. Price is going to come take out This low right here should be your target. Now, I don't know if I've told you about something whereby I said if price is doing this, moving this way, and then it fails to take the previous low. If price fails to take the previous low, is going for the next high, right? If price comes back down, fail to take this low right here, is going to take out the high, right? Then if price broke the low finally and then fail to take out the high right here, is going for the next low. If price fail to take out this high, is going for the next low. This concept is a very powerful concept. Same thing for the trendline compression. If price is doing all of this compression, you see it is protecting all of the highs. It is protecting all of the highs while taking the lows, right? As it is protecting all of these highs for future transaction, right? Future transaction that is going to come and take out all of the highs. You understand this?
Yes.
So that's how like trend line compression work, trend line liquidity. Price is going to keep protecting either highs or lows so that it's going to take out your liquidity levels. So let's look at, okay, so far on what we've done so far, the algo structure, the algo liquidity, the liquidity types. Do you have any question or do you want to like add anything? Okay, cool. So now let's look at selecting POI. Selecting POI, refinement, wicks, imbalance, liquidity before POI, all of this. Now, candlestick wicks are refined POI on lower time frames. Candlestick wicks are refined POI on lower time frame. Now, this candlestick right here, this wick right here, is from the 1 hour time frame of my network, my internet. Okay, this week right here is from the 1 hour time frame, right? Let's go on lower time frame and see the refinements. Let's see the 3 minutes. Oh, data points unavailable. Okay, so let me just use the saved charts. Where did I keep that? Supply and demand. Okay, good. Now, how I mark POI, right? There is something that we call unmitigated weeks. Unmitigated weeks, in the sense that, let me use trading view for this. When we have this right here, then we have a week to the upside, right? Then the next candle probably forms from here, right? Now, this week right here, this week is an unmitigated week because no candlestick, no other, the next candle did not mitigate this week right here. The next candle did not mitigate the week. So this can be used as a POI, an unmitigated week. But then if we have this right here, this then shows us, this then shows us that this week right here mitigated this one. So I'm not going to look at this as an unmitigated week. This week right here then becomes mitigated week. Let's look at how we look at unmitigated week from the 1 hour time frame. Let's mark unmitigated week and also mitigated weeks. So right from here, right from here, good. If I mark this week right here, right, and extend, we see this candlestick week right here, this one mitigated this one. So this was mitigated by this. That means this week right here was a mitigated week. We cannot use that as a POI. Then if I extend this one right here, we see no candlestick mitigated this. So this is an unmitigated week. This week right here is an unmitigated week. Let's keep going. Good. This week right here is an unmitigated weak. And we see the nice reaction from the weak, right? Unmitigated weak. For this one too, for this one, this was an unmitigated weak. This was also an unmitigated weak. So how I mark POI, right? Now, see something. If we want to mark our supply zone, right, we can mark this whole range, right? Some people do mark this whole range as their valid supply zone. This whole range right here as a valid supply zone. Now, remember I said weeks are refinements on lower time frames, right? Weeks are refinements on lower time frames. Now, instead of me going down to smaller time frames, going down to like 5 minutes, 1 minute to refine this POI, this whole POI, I just mark this week because this is our last unmitigated week. I just mark this and wait for reaction in this time frame. Now, if I go on lower time frame, I'm going to see that this week is an unmitigated week and it's also a smaller time frame POI. So let's go to 15 minutes. Good. So now I went to 15-minute time frame now. And on 15-minute time frame, this is what we had. This last buy to sell candle was our refined POI on the 15-minute time frame. So instead of going on lower time frame from the 4 hour time frame, I can mark a POI that's still the same POI on lower time frame. So let's see what we have on 5 minutes. So you see on 5 minute time frame is still this whole range. Okay. So let's see, look at other examples. I'm supposed to go on higher time frame. So let's just look at this saved charts right here. Good. So now you see all of these weeks, all of this. This same chart is from the 1 hour time frame. This one is a 15-minute time frame, right? So let's compare both of them now. On the 1 hour time frame, I had 1 week, 2, 3, 4, 5, and 6. Now let's go on the lower time frame to see how these weeks are being the same. So just take note 1, 2, 3, 4, 5, 6, right? So on the next time frame, we see on the next time frame, that the 15-minute time frame, that 1 hour week is still the same POI at the 15 minutes. This one too is still the 15-minute refine, still 15-minute refine. For this one too, see it is exactly the same 15-minute last candlestick for the buy. Same thing with this, still refine. And this one too, on the 1 hour time frame, notice from here to here, it was just a single week. But on the 15 minutes, it was our last sell to buy candle, a very perfect refined POI. So now, selecting POI, you know our criteria for a valid supply and also a valid demand zone, right? So in order for you to select this week, you just don't mark any random week and call it a POI. We need to see reason in order for us to mark that week as a POI. And for us to mark that week as a POI, we want to see the fabrical structure, the liquidity get taken, IPA, EPA, or imbalance before we mark the weeks. You understand?
Yes.
All right, cool. So I think that's about selection of POI. So when we get to where is it? When we get to the next, when we get to entries, that's when we are going to be seeing mitigation of a certain POI, and then we then look at those POIs to trade off them from our entry timeframes. So far, because that's going to bring us to the end of the session. Or let me take you to a clean page. Good. You can use this.
Okay.
Okay. This is transactional liquidity. Yes. This is inducement liquidity, both external structure.
So
This one, this one is internal structure, SLQ. Are you seeing what I'm saying? This one is in structural high, this SLQ. Okay. Because
okay,
if you want to mark external, this external structure high, this external structure low, this external structure, this external structure, this was external structure, then this also external structure, this external structure, this is external structure. Yeah, so this one is inducement liquidity, this structural liquidity. You understand this in internal structure. Do you understand that?
yes.
Okay. So then, yeah, that's good. So you have any other question? Mm. So yeah, that brings us to like the end of today's session. On our next session, that's when we'll be looking at the entry types, entry model, and all of that. So what you'll be doing, what you'll be marking up, right? What you'll be doing is the types of liquidity. Let me go back down. The types of liquidity now. The inducement liquidity, the structural liquidity, and the transactional liquidity. For the inducement liquidity, give me like 10 examples of inducement liquidity, right? With all of the markups, right? The fake BOS, the inducement, mitigation, true break of structure, okay? Then for the structural liquidity, give me five. So you give me 10 ILQ, 5 SLQ, 5 TLQ. And don't forget for the SLQ to be valid, right? Let's say we have this. Good for this is SLQ, right? So for if you want to mark the SLQ now, right? Price should take out the SLQ low and then goes back up. Understand? Price should take out this SLQ. So if you want to be marking, price should take out this SLQ before going to the TBOS. You understand?
Yes.
So 10 ILQ, 5 SLQ, 5 transactional liquidity. And also some of these, right? If price If price reacts from an unmitigated week, right? From an unmitigated week, you can mark it to. So you send, okay? So 10, 5, 5. You
Okay.
understand?